now as we head into the overnight session and tomorrow, on the upside, the existing areas of resistance are still going to be valid and in play. You can see here is the daily chart on ES. So right now we have this balanced breakout pattern that's in play, and we're essentially pushing back up into this multi-day range where there is still potential for sellers to step in. As I mentioned in the morning video, the higher the market pushes, the better the resistance it will run into and better the odds that sellers or larger time frame sellers could be active. So today has been bullish, and we should have played it on the long side. That's perfectly fine. But just because today has been bullish doesn't mean that it now needs to remain that way. So right now, the active short-term pattern is bullish. And the question now is, are intermediate time frame sellers going to step in within this balance area that ES broke down from, right? So you can see that as we push back up, we have the 61.8% retracement from the swing high to swing low at 54.90. So as we push up into the high here at 54.73 quarter, or if we push up into 54.90 or close to that area, that is going to require continued initiative buying in order for the market to now head higher. So what that means is what got us from here to here is not necessarily going to be enough to get us from here all the way up into 5,600 or so. Now, if we end up breaking through the resistance over here, right? If we end up breaking through 54.67 to 73 quarter and 54.8375 to 93.75, then it would certainly open the door for the market to eventually go back up towards the 5,600 area, but that is yet to be seen. It is resistance until broken. So on the upside, we can still technically get sellers active at 54.67 to 73 quarter, 83.75 to 93.75. That's where we have that big 61.8% retracement of the large swing. And then we have another HVN here. So the point is that given how much the market's already moved up, if we're not seeing continued signs of initiative buying, then ES could find sellers at one of these resistance zones, and it can kick off another day or so of balancing. It doesn't mean that eventually the market can't go higher, but remember that our view is always towards the next day, the next session. We're not trying to look out, 2 or 3 days or a week. The focus is on day trading. So the question is whether there is going to be sufficient strength and buying interest at these higher prices to now put in another big bar on the daily chart to the upside, and that seems much more unlikely. That seems like a more difficult thing for the market to do. So eventually we may go higher. It doesn't matter. As day traders, we need to be focused on the here and now, and we should be looking ahead a few hours, maximum 1 day. So if tomorrow we're also seeing trend up conditions, yeah, then we may have to go up into 83.75 to 93.75 or even 5,500 to 05 to attract sellers. But if we're seeing a lack of momentum and a lack of strength, then we could attract sellers at 67 to 73 quarter, and especially these upper zones, and then we may just kick off another day of balancing and consolidation, and that's a healthy thing for the market, right? Because if you keep pushing up without really resting in between, those types of moves are more prone to a sharp correction. So the higher the market pushes without really consolidating in between, the more risk gets created for any new buyers that are jumping in at higher and higher prices. And of course, when that happens, it dissuades any new buyers to jump in. And then that dynamic is what leads to that sharp correction where everyone is trying to head for the exit at the same time. So that's going to be the context as we head into overnight and into tomorrow morning.